This one that coming up, I think you're going to really, really enjoy. We've been talking about the market, the change in the market. You asked Kent and I our opinion on what that looks like. This gentleman is an expert in this space, and he comes from a financial background. So he looks at the numbers and leading indicators as well as lagging indicators to try to help forecast what's going to happen next. He's going to come up here and share that level of intel with you at this moment. So I need your absolute attention and a big warm welcome. Let's bring up Mr. Robert Heyder. Yep, bring him up. Go, brother.
What's going on? He's got it. What's going on? So, hey, I'm really, really excited to be here. Really happy to be involved with the group and be able to kind of get up here and talk about the stuff that we're analyzing every day. Really kind of what it comes down to, right, is, and what we're really going to dig into is how to crush the correction. We know a correction coming. We know that the market's going to be shifting. How do we get out there and just really, really make it work, right? Well, before we get into that, let me see if I can make this thing work. Negative. Oh, perfect. Sweet. Okay, so kind of how to win, how to really change your life money. A lot of the folks that I know, I'm come from the financial background, so a lot of the folks that I know are, that came through the 2008 recession just crushed it. If they were set up and ready to go, they were able to go out there and dominate. Change your life money, big bucks. So we're going to dig into some of that. Before I get into it, though, a little bit about me. From St. Louis, Missouri. Really happy to be in San Diego. When I left St. Louis on Friday to come out here, it was 7 degrees. So it was pretty nice landing in San Diego and getting some sun. So that's my wife there, married 10 years, Austin, and two kids, 2 daughters, 6 and 3. So, and a little bit more about me. When I was 16, I was a national champion BMX racer. So, random little tidbit of some. So, backstory. So, my background is in commercial real estate finance, and I've got a degree in real estate, degree in finance, and was in the banking world for about 10 years, primarily financing real estate projects, right? And spent a lot of time learning how the market works, how it reacts. We were lending out, managed a $250 million commercial real estate portfolio. We, my office in St. Louis had about $1.2 billion in assets. There were only about 13 of us there. So we had a lot of market exposure. So kind of analyzing where we were in the market and all of that was just something I started doing at a pretty young age and was able to kind of build into something. So in banking for 10 years, managed a $250 million portfolio. I got into investing full-time about 5.5 years ago. I was doing it on the side a little bit here and there, but really full-time about 5.5 years ago. And I remember when I was in banking, it's kind of a funny deal, right? So if you're an entrepreneurial person, being a banker is probably the worst possible job to have. Every day I'd be there and I'd just be lending out money to folks to follow their dream, and the entire time just being like, what the hell am I doing? I need to be on the other side of this desk. But the one good thing I was able to do during this whole time was I would sit at my desk, and I have a Bluetooth thing in, right? And I'd be just banging through podcasts. And so I was really listening to a lot of Sean Terry back in the day, and I was doing it at 2 times speed, so just really, really fast. I think Brett Tanner was mentioning that's kind of what he does. And the funniest thing was, by the time I'd actually gotten through all of that, I listened to all of his podcasts at that time. It was 120 or so of them. And by the time I actually met Sean, I was so used to the speed of his voice being so fast. I thought he was high. I was like, what the hell? I mean, it was so slow when he was talking, so I was used to it going so damn fast. And I was like, man, Sean, you got to get there faster. This is taking too long. But yeah, so I was able to do that, able to focus, and was allowed me to kind of get out of my job. And random fact, I ended up quitting my job without ever wholesaling a single deal, just with the confidence that I could, because other people were doing it. But Well, cool. So a little bit about me. We wholesale about 100 houses a year. We'll probably do about 130, 140 this year, if not more. Big in the rental portfolio space. So own about $6 million in residential real estate, rental properties, and about $14 million or so in commercial properties. We also have a brokerage that total producing about $70 million or so, and we buy a fair amount of commercial real estate backed notes. So a little bit about us, about me, and kind of give you a little bit more understanding of, do you think it's pretty important that I track what's going on in the market with $20 million in rental properties and all of these other things, all of the back office, all of the employment that I have in order to be able to run the operation? What's going on in the market is going to have a really, really big impact for us, and it's kind of the same stuff that we're evaluating every day, kind of digging through all that stuff. So what we're talking about, right? Crush the correction. So you guys are all in real estate for the most part. Actually, let me do that real quick. Who is actively investing in real estate now? Raise your hand, please. So about half or so. Okay, and of the folks that are doing it, raise your hand if you're wholesaling properties versus rehabbing them. So raise your hand if you're wholesaling properties. Okay, who's rehabbing properties right now? Okay, so about a half or a little more than a half. So cool. So obviously a lot of you guys, more than half the room or so, are actively in real estate. If you're at this conference and you've stuck around this long, it must mean that you've got the desire to be, more involved or to get involved. So really what it is you really have to know what's happening in the market, right? It's going to play a huge role here, and where do we get that info? That's the biggest piece. Everyone probably knows it. They're feeling what's going on in the information or going on in the market. They know what's happening, but the question is, okay, what information should I be tracking, and where do I get it, and how do I how do I evaluate it? You can't just rely on the news. Obviously, the sky's falling every day. This person's saying one thing, this person's saying something entirely different. So really got to figure out where to get that. And I'm going to show you guys where that is, all that information is here. Beyond that, we want to talk about kind of how to play defense, how to prepare, how to really kind of dig in, right? So if you look at it, you think the Rams are evaluating all the Patriots' plays and getting ready for the Super Bowl next week? Yeah, right? So they're watching all the films, they're seeing what they're going to do because they want to limit the variables that they don't know. So the Rams surely are going to bring a bunch of new plays that they hadn't done before. They're going to try and trip the Patriots up. But in reality, they're going to be a bunch of their old plays that are still going to be in effect, right? So it's the same concept. We're going to try and figure out what's happened up to this point, what are the leading indicators, and then once we've got that basis, we're going to track it going forward. And we see too big of a drop or too big of an increase in certain, depending on what the metric is, then we're going to know, hey, we're doing something now that's different than what was done before. And then beyond that, once we've got the defense set up, once we've got that good foundation and understand what's happening, now we're going to talk about how to capitalize on it. Cool. So who in the room was in real estate in 2008? So enough folks, perfect. So you guys know how it felt, right? It felt terrible. It was, just devastating. You didn't know what the hell was going on. The same point that you needed to sell, everyone else was selling. Prices were falling. It was crazy. So everyone, I don't know if you guys follow a lot of folks on Facebook or Instagram or whatever, but a lot of folks are talking about, they're just waiting for the opportunities that are going to come out of the recession. They're just waiting for it. And a lot of the folks that I see on there are young enough that they didn't really feel what happened in 2008. And I don't know if the next recession is going to be, I was going to say, I don't know if the next recession is going to be in 2008. I really, really don't think it will be. That was a pretty substantial recession. The next one's probably going to be pretty, relatively small in relation to 2008. But nevertheless, so here's the question. When the market just, came to a halt late 2007, early 2008, right? Did the opportunity immediately hit, or did it take a little bit of time? What do you guys think? It took a little bit of time, right? So there's that delay there in the middle while everyone's trying to figure everything out and get their stuff together. The folks that were really on top of it, They were able to kind of turn a little bit faster, but for most folks, they didn't know what was up, what was down. They just had to kind of figure it all out, and it took a little bit of time before it really started to come back up, or before there was real opportunity to jump on. And then the other question is, can you recognize that same opportunity when you have this immense stress load on your back from either having a current real estate operation, trying to figure out how the heck to keep it afloat, what to do, things aren't selling, whatever it might be, will that opportunity look the same way? And then if your business got rocked, you lost half of your buyers, cash flows down, can you think clearly? And will you be able to react and take advantage of opportunities when you're in that mindset? So, some of the stuff. So, jot this chart down real fast. Memorize this thing, and then we're gonna get on to it. I'm just kidding. No, so this is a chart that kind of talks a little bit about what we're gonna do. Don't even pay attention to it. I threw it up there because it was so ridiculous. No one knows what's going on there. But the key is in 2018 there through December, the chart's up. That's consumer confidence. One of the biggest things that I look at, one of the biggest things that I really track is what's consumer confidence. What are consumers doing? So this is a chart showing you right now, real time, this is as of December, what consumer confidence was. Now you can see there a little bit in that red line on the far right that it dipped down a little bit, but it's still at near, all-time highs. So that tells me that we've got a little bit of time before the actual, shift occurs. We probably have about a year or so. Probably first quarter 2020, maybe second quarter, somewhere in that ballpark, give or take. It's somewhere in that range. The other thing that we really, really want to track are jobs, both from a defensive standpoint and an opportunity standpoint. Because jobs, like anything, how the hell does someone buy a house? Well, they gotta have a job. They gotta have income to buy that house. How do they rent a house or a property? They gotta have income. So jobs are gonna be the real big item. And jobs are gonna be a forward indicator. So consumer confidence and jobs are gonna be a forward indicator. So a lot of folks in real estate are always talking about, how are you tracking what's going on in the market? What's happening in the market? And real estate agents and folks that are maybe not as sophisticated in this realm are always talking about inventory. What are inventory counts? How many months of inventory? Well, that's an indicator. It's great to know that, but it's kind of a lagging indicator to some level, because market confidence and employment are going to have an effect before you really start seeing inventory too much. A little bit different, but so though, if you want to try and get ahead of it, you want to really outsmart the competition, or not even outsmart the competition, but really be able to take advantage of an opportunity when other folks can't. This will be one of the best ways to go about doing it. So cool. And then the key is here also, another big thing, if I can get this guy to go. Keep in mind, it's a relative game, right? It's like everything in life is relative. It's a relation to something. The weather was amazing here in San Diego in relation to 7 degrees back in St. Louis. So, in relation to that, so you don't have to be the smartest guy in the room, smartest person in the room here. It doesn't really matter. You just have to know a little bit more than everybody else. Take a few steps, because what's going to happen is when the shift occurs, it's going to wash a majority of the folks out. It's going to be a reset, right? So you don't have to really sink in and become an economist overnight, but just learn some of these things, and on a relative basis, if you are 5% smarter and you're 5% better at tracking the market, and you have 5% better opportunities when that time comes, and the competition wasn't preparing at all, and they get knocked back 20%, well, in reality, in relation to all your competition, you're 25% ahead, because they went back and you went forward, right? Hold on here. Cool. So yeah. So it's really like, it's the old joke. A bear comes into a campsite, and the one guy starts lacing his shoes up, and the other guy goes, "What are you doing? You're not going to outrun that bear." It's like, I don't have to. I just got to outrun you. It's the same concept. So let's talk about this, right? So from a defensive standpoint, what can you do now? What can you do in the next year to prepare for a shift? First off, clean house. Get your operation both personally and business-wise, cleaned up, tightened up. You've got your systems, your processes, you've got everything tightened up, you've got, your funds set aside, you've got emergency funds, you've got, anything that would need to be done kind of within your operation put together. And then understand what'll happen, and then prepare to take action based on that. I'm going a little bit more detail here. So think about it from this standpoint. When the market shifts, do you think you'll still have a buyer's list that's going to be as active as it is now? Probably not, right? Okay, well, that's a good thing to know. So it's great. If you're a wholesaler, if you're a rehabber, you've got substantially more market risk than you do as a wholesaler, right? Of course, because you've got inventory, you've got cash out there, you've got all this stuff, it takes time. But even still, as a wholesaler, yeah, you don't necessarily have as much risk there. But there will be a period of time, and once the shift really starts to set in, that you're going to still be spending money on marketing. Well, there's a loss there, because if you're spending money on marketing to buy properties, even if it's just on a contract or an option contract, or you have outs in the contract or whatever, if you can't get it sold, then that deal's dead anyway. So you just lost the money on marketing. If you've got payroll, you've got staff that you're paying, and you don't have the income coming in still, and then you're living off of that income. So sure, you don't have the market risk. You don't have $1 million in debt out there on a rehab. So you're not as bad off, but you also will have an issue there where you're not going to have any income coming in, or it's going to be slow. It's going to be less than what it was the month before. So just being prepared for that and saying, okay, well, what do I do in that scenario, right? So when you're talking to your buyers, start evaluating that now. Start thinking about it. Who's going to be buying as that big shift occurs? And then, just ask them straight out, hey, are you guys preparing for the recession? Are you guys preparing for a dip? If so, what do you plan to do? And then you're going to find out real quick, well, who's going to be doing it and who's not going to be doing it. And also, the more skilled folks will be probably, the hedge funds and stuff. They'll slow down their buying for a little bit, but they'll be jumping back in. So the mom and pops, they're going to have a hard time getting financing. So, that's just be prepared for that and kind of get your things set up. So the key is here, develop a plan for the shift. And I don't want to make this sound doom and gloom. I'm just kind of putting out what's really going to happen. I don't know how deep it's going to be or exactly when it's going to occur, but being prepared will be a very, very good thing, and it'll get you set for that opportunity side. So I don't want this to sound too doom and gloom. We are still actively investing. We're doing a bunch of stuff, but just have a game plan. So visualize what is going to happen when the market shifts. Like how do you see it actually occurring? Just like we were just talking about, right? The buyers are going to slow down. Banking, financing for their deals are going to slow down. They're going to get rocked, and all these things are going to trickle down. So it's going to slow the system down a little bit. Okay, well then evaluate what your operation is. How are you going to cut costs? What are you going to do to adjust? Are you going to lessen your marketing? Are you going to have to reduce staff? Literally have that plan, draft it out on paper. It doesn't have to be super detailed. It can be bullet pointed, but just have a plan. Like, hey, this is the first step I would take if I had half the sales coming in next month than I do this month, and I thought it was going to continue. So if you know what that plan is and you've got it written down, when the time comes and you get rocked, you don't have to be, when you get rocked and you can't think clearly, you don't have to be making these decisions. You will already have that game plan roughly put together. Say, shit, I was preparing for this. I know exactly what to do. Hey, if the Rams pull, they come up with some new offense, or they come up with some new offense, well, the Patriots are going to say, okay, well, we were ready for this. We knew that they weren't going to, we knew exactly what to do if they did X, Y, or Z. They're going to do something unique. Okay, well, let's spread out. This is our plan. So I'm not trying to do it on the fly, right? So where to cut costs? What marketing sources, are getting shifted or cut? Do you have free marketing sources? Do you have referrals? Have you been building relationships with agents that will still be in the market, with banks, with attorneys? Building these with senior living facilities, building these relationships with these folks are going to bring deals in. As the market slows on a retail basis, the as-is buyer is going to become very popular again. Everyone talks about cash offers and all of that, and we deal with it every day as well, but when it really comes down to it right now, everyone's got a cash offer, right? Cash is prevalent. When a cash offer matters is when no one else is buying. That's when the cash offer really has value. So kind of getting all those things together, and then all of those contacts you would have already had that are coming to you, now you're going to have a better buying opportunity, and you're going to be the group still buying versus, when no one else really is. So that cash offer is going to mean something a lot more. And then how strong's your network, like I talked about, kind of building that out. So from that, right, once you have your basis set up, once you have all of your defense, you know your plan, you've got the playbook, okay, well, this is what we're going to do when this happens. Sorry about that. You shift through everything. Now you're ready. You're prepared. You've got all of your ducks aligned. So when that shift happens, you have to let a couple folks go. You're lessening marketing, but you're leaning more on your referral connections. You're doing all that. Now you're ready to take offense. So now a lot of that information that I was kind of briefly talking about, and I'm going to go over that at the end here, but what to track, jobs and consumer confidence. Like once you know to track those things, well, now you can start really thinking about it and track them going forward versus going back. Because now the recession, the shift has occurred. Now it's time to jump in. So you're still going to keep tracking because you want to know kind of what's going on. The market's going to be terrified. You're going to be ready to go because you're going to see the lines. You're going to see the charts starting to tick back up, right? Well before the news starts reporting on it. So how do you really, really cash in on this stuff? Well, if you know the market, the opportunity is going to present itself. So really relying on strategic partners, folks that really understand this stuff, and seeing what they're feeling out there. You're going to be tracking a lot of it. You're going to be tracking the jobs reports, the consumer confidence reporting, all that stuff. But what strategic partners are out there that you can also lean on? Folks in the mortgage industry are big in that industry, or big in the tracking the market. So reach out to them and say, hey, what are you guys seeing? Reach out to them every couple of weeks or every month or so. And then what's going on in your city right now that you need to be digging into? Think about this. So we're talking about jobs as the big item. Well, certain employers are going to be hit by the shift much harder than others. So let's think about Quicken Loans, for example, in Detroit. During the recession, they boomed. They were hiring like crazy. The mortgage industry did really, really well in the last recession because government drops interest rates. Folks are refining their house if they still have a job and they've got all these things. They've got they have the ability to do so. So the mortgage industry just kept refinancing and doing all of that. Well, so they were hiring like crazy during the recession. So know which employers are going to be doing better in a down market and see if they're in your city. Because if they are, well, then there's going to be substantially different opportunities there. One, figure out where those employers and the employees of those employers are looking to buy. What are their traits? What are their demographics? What are they interested in? Because those are going to be the areas where you're going to see a lot of activity as the market is falling. That make sense? So tracking that. Really capitalizing on dead investor leads with house listings. This is going to be another big one, right? Where kind of setting up a network with brokers so you're able to capitalize on dead deals. You have the ability to make money on a deal that otherwise might not. I know someone mentioned, I think maybe it was in the Q&A, about short sales. And if you're not currently doing short sales, jumping into an entirely different channel might not be the best idea. But if you can start networking with short sale agents that are very active and good at what they do, that will become a hot item again. The banking industry is not the same as it was back then, so it'll shift. It'll be different. But we know that if jobs aren't there and people have to sell their houses, or they can't pay their bills, well, short sales and foreclosures are going to come back to some level. So be prepared for that and start looking into those listings, short sales, anything along those lines, just kind of making those connections, networking to that group. Like I mentioned, develop those warm leads from senior living facilities. People going to senior living is essentially recession-proof. It has to happen, right? They're getting older. They can't stay in their home, whether it's going to be private care, assisted living, or senior living, or whether it's going to be government subsidized with Medicaid, Medicare. That's going to occur. So if they're moving out of a home into a senior living facility, those houses are coming. So being prepared and having those referrals already lined up, because you're not going to want to spend a bunch of money on marketing, but you need leads to kind of still keep coming in so you can take advantage of those. And then creative deal structuring is going to become a very, very important item again. Note purchasing, subject to, all of these different variables, kind of like Eddie Speed was talking about yesterday. Digging into some of that information is going to become very important when people can't sell. So that'll come back around. It's going to be far more prevalent. So, additionally, where do we look to get this market, this market reporting? Where do we look to get this information that we need out there, right? And then how often should we be checking it? So a couple of the sites I'm going to include, cbre.com is one of the big ones. I'll pull up the slide here for you guys so you can take a picture of that one. So CBRE, the Reis report, reis.com, a lot of these different sites have this reporting information, right? And you can get a lot of good data at a glance, and then you can see what office space is doing. Is the vacancy rate increasing? Are rental rates changing? Are subleases becoming more prevalent, right? Because if lease rates for office buildings are going up and vacancy staying constant, well, it probably means that things are kind of ticking back up. Things are going well, right? Because if lease rates are increasing, then that means there is demand for that space. So, kind of tracking that data and knowing these shifts. Find other folks in the industry, like I mentioned, to give you this guidance. Kind of talk with them. Start developing these relationships and talking with these folks now, and then come with some additional information. It's going to be really, really helpful as we get into the kind of recession, into the shift, because we're going to be set. You're going to know who to talk to. You're going to know the information. You're going to learn enough about it. You're going to build these relationships. You're going to be talking about it. You're going to become more deeply involved in it, and it'll become second nature. One of the big things that we always try and do, we'll set a weekly calendar invite or like a reminder, so we can say, hey, once a month, pull up that report, get them set up there, take 10 minutes, review through them, and it just becomes a part of your monthly kind of routine. Kind of get through there. Some of the stuff that we were talking about yesterday that's going to be really, really good from an opportunity standpoint. So markets like San Diego, Phoenix, Vegas, a lot of the cities in Florida, Texas, right? A lot of those areas are folks that have second homes. You think second homes might get hit harder when the shift occurs than areas with that's the first thing that people sell. When things start going bad, the first thing that's sold is the vacation home, because it's a luxury item. It's not something that you use all the time. Well, guess what? That same school of thought happens to everybody whenever they lose confidence, whenever the market starts to shift. So all of those homes will get listed very quickly, which is going to drive prices way down. So, start tracking that, knowing what's going on in the market. So if you're from one of those markets, you're going to probably see a bigger dip in prices and valuations than you might otherwise. So now you've developed a buyer's list that's going to continue to buy during the recession. You've set your footing very firm. You know exactly what to do. You can think more clearly because you already have a game plan. You're ready to go. You're tracking the websites I'm going to give you, CBRE, Reis report. You're tracking the consumer confidence indicator. You're tracking all this data. You know what's going on. You can make the adjustments. You can shift. Now, as you start seeing it shift back up, you know exactly where to go and buy. You know the markets that got hit the hardest, which is going to be clear, but you know why now, right? Because those second homes are going. Well, at the same point, you've now set up these relationships so that you have the ability to get lead flow coming in and become a a trusted resource for some of these agents, some of the senior living folks, attorneys. You've been able to get these free leads coming in because you didn't want to spend the money. Well, not you, but I mean, you're trying to lessen your spend because you're unsure of the market. Well, you still have leads coming in. So now you have all the variables and you're watching the market tick up. You can really, really take action and have huge impact. So, when it comes to it, I always say, the way hedge funds work, right? They're looking at 4 or 5 layers before kind of making decisions and making adjustments. I mean, they're digging deep, deep, deep into the numbers. Has anyone ever seen the show Billions on Showtime? Anything? You guys watch it? It's pretty good. But it's about a billionaire hedge fund guy. But when they're looking at stuff, let's say an earthquake hits some area in another country, a developing country with big economic impact. Well, they're not saying, okay, that earthquake hits, so tourism's going to fall or shipping's going to fall. They're saying, okay, well, that all occur, then this, then this, then this, then this, and here's where the real opportunity is. It'll be the exact same in housing. When you really kind of track all those different things down, and you start, but the only way you can really get there is if you've set up the basis to analyze the market, know what key indicators you need to be tracking, see the shift, and be ready to capitalize. So now you're in the game, right? It's time to compete. This is the stuff that takes folks from doing 1 or 2 deals, from ever doing 1 or 2 deals to doing 1 or 2 deals a week. To doing 1 or 2 deals a month or 1 or 2 deals a week, right? To really kind of churn through it. Knowing what to look for, asking the right questions, looking around the corner, seeing what's really going on out there, and being ready to capitalize on that shift, it's just going to be immense. And, this is stuff that we're doing every day. These are the sites that we're looking at every day. These are the things that are allowing us to really have the confidence to make decisions about kind of what's going on right now, and then where to prepare for as the recession, or as a shift, whether it be a recession or not, kind of comes into effect here. Like I said, I think it's important to know that we are, probably a year, 12 months or so out from really kind of seeing this big shift, but we do know that it's absolutely coming. I think there's still a huge opportunity right now to be made. I mean, we've bought nearly 80,000 square feet of commercial space, in the last 4 months. But we're still actively looking at deals, analyzing things, doing everything we were, but taking a step back, preparing for what's going to be coming, preparing for, what that shift's going to look like, knowing what indicators, and being really kind of diligent on those over this next year is going to put you guys in an entirely different ballgame. And like I said, on a relative basis, it's going to be so immense because no one else is really thinking at this level, I don't think. I don't think most wholesalers, most rehabbers are ever really digging this deep. They're making decisions based on what they see on the news. They're making decisions based on what they've heard. Oh, inventory counts down a little bit. We were just talking yesterday. So this is a really, really big piece, right? We know that coming out of '08, almost no new homes were being built, right? Funding was cut off. I think Sean Whalen was talking about that. He had a bunch of development going on. The bank cut all his loans off, right? So we know that happened. While the population was still growing around the country, right? People are having kids. Folks are getting older. They need new homes. Well, so we've really went for about 5 or 6 years from, mid to late '07 through about 2013 before new home construction really kind of got up. So we had 5 or 6 years of relatively no supply of new home product. So when the economy started getting a little bit better and confidence started increasing and jobs started coming out, well, then now everyone starts buying homes again, right? Well, is it shocking that with all of this demand, because population's growing, people are getting out of school, with all this demand that's coming and no new supply, is it shocking that prices jumped? So if there's no new homes and there's a lot of people that want to buy the ones that are out there, prices should go up. So that's what we saw, right? 14, 15, 16, 17, we started seeing those prices going up. And then finally, the inventory started catching up. Now new homes are getting built. Now it's starting to fix itself. Simultaneously, interest rates started going up a little bit, right? So we've been feeling that. So now the same home that you could have bought before costs you a little bit more every month because interest rates have gone up. So now we're seeing the amount of homes ticking down a little bit, right? So we're seeing the amount of home sales kind of going down. They're down about 10 to 12% from their highs in 15, 16, 17. So on one hand, it's really easy to be concerned about what's going on. Oh my gosh, home sales are down by 10 or 12%. But in reality, after taking a step back and looking at that picture as a whole, which is some of the stuff that I'm kind of talking about and what I'm going to show you these different websites, well, now you can look at that and say, okay, yeah, they are dipping, and it probably is something, but it's not as big of an issue as it would otherwise look if you were just looking at the charts, right? There's more information there. So my point is, what I'm trying to teach you guys and trying to kind of talk about a little bit here is that it's kind of a two-piece puzzle. So I'm trying to give you what you need to learn how to fish, and then I'm going to give you the sites and all that information so you actually have the fish. So you kind of get both in one big swoop here. But the key piece is to start thinking these things through, understanding kind of how that shift occurs, and knowing where to track it. So as going back for a second, as that demand for housing has dropped by 10 or 12%, and it has this impact, the key is understanding what the background is there and knowing how to track that and knowing what is actually the underlying pieces that are causing that to occur so that you don't overreact to that correction. So here are the websites down at the bottom there. Case Shiller, CBRE, the Bespokia report is a pretty good one. The conference-board.org is where you get the consumer confidence rating. That's where all that stuff goes. Reese.com is a very, very good one. It's a very good site to get data. You can pull overall market studies. You can pull office and industrial reports, knowing that the jobs are, the reason those are there, obviously to employ folks. Those are where the jobs are coming from. So if we start seeing a shift in those, start seeing a shift in vacancy rates, too big of a shift in rental rates for office space, it probably means that that's a forward indicator of what's going to be coming, lessening the jobs, layoffs, things of that nature. If we're starting to see vacancy increase, you're starting to see rental rates fall, probably because they're going to start, lessening their office needs. That's my website, corehomebuyer.com. I think it should already be up, but if it's not, it'll be up by the end of the day. I'll have all of these websites, all of this information in one just location, so you don't have to go to all these different sites. I'll have all that data on one spot for you. And then kind of what the sites look like, how to kind of go about them. You want to go up to the resources, the research tabs up there at the top, and then kind of pick on your market and pick all that data. Well, guys, hopefully that was some good information. Hopefully that gets you what you need, kind of build some defense so you can be ready to rock and roll and hit the offense, really take advantage, crush the correction, and make just substantial amounts of money.
Give him a round of applause. Mr. Robert Heyder.